off, caveat before I go into the detail, I'm not a qualified accountant, and this is for educational purposes and really to share with you what I do and also what I know other people do to make sure they remunerate themselves as tax effectively as possible. Ultimately, you need to have a good accountant and get tax advice to make sure what you do is most beneficial for yourself and your company. As I say, what I'm going to share is some tax advice here, but you do need to be careful that the tail isn't wagging the dog. This stuff only works if your company is profitable, so you need to make sure that the company can make money to then remunerate yourself and other ones in a tax effective way as possible. So there's 15 top tips I want to share with you of ways that may be appropriate for you to remunerate yourself. So first one is pay yourself the most effective salary. The most effective salary really from an organisation to an individual is, I think it's £8,628 per annum. The reason you want to pay yourself that amount is that's the rate before employer national insurance kicks in. So it'll hit the company as a cost to the organisation, and it's normally still within your allowance, so you'll actually receive that as tax-free. Other reasons, though, that's good to make sure you're paying yourself a salary of that amount is I think it's the minimum that is needed to give you the credit for the state pension, if there's one still about when we retire. Second consideration you might want to do is to take a dividend from the company. Obviously, the company needs to declare profits for dividends to be paid, so that's the first point to be aware of. How dividends work: you're eligible to receive £2,000 tax-free. Above £2,000 if you're a lower rate taxpayer, the rate on dividends is 7.5%. And if you're a higher rate taxpayer, that then increases to 37.5%. The third area you might want to consider is either in terms of family members. So if you've got a partner who's working with you in the business, either as like on a joint venture basis or simply helping you out, you can obviously reward them in terms of salary and dividends as well, as long as they're a shareholder too. The fourth area to look at is pension contributions. Pension contributions qualify for either employee or employer tax relief. So you can, on the employee side, if you're paying yourself £8,628 and you had other taxable income and you match that, you would then get a credit if you were either 20% or 40% in income tax for it. And if the company made the contribution, they wouldn't pay any corporation tax on that. You're able to make a contribution of up to £40,000 per annum, so that's quite a significant payment that can be made. The other thing to be aware of with pension contributions, that's a really clever strategy, is that it's tax effective up to about £1 million, so that's £1 million you can withdraw from pre-tax profits. But also from an inheritance tax planning, pension is treated far more tax favourable than what company shares are. So if you're thinking of inheritance tax planning, you want to save in corporation tax and income tax, using pensions is a great way forward. So the fifth area you should really consider is in terms of company cars. The government, quite rightly, is trying to move everyone over from kind of petrol and diesel to electric, and they've changed quite an overhaul of how BIK is treated in company cars from April 2020. And typically, again, it depends on the car and the actual emissions from it, but you'll have a 0 to 3% charge for BIK now on that. What that actually means, for example, if you were to get a Tesla Model 3, I think it starts off at about 40,000. For 2020-21, there is actually no BIK to pay on it. If you go to the next tax year, 21-22, and you're a lower rate taxpayer, the BIK charge to you will still be less than a tenner. So that's a real significant change that's coming from April 2020, and it's also a very cool car to drive as well. The sixth area to look at is your annual health insurance. And whilst this isn't obviously going to put money in your pocket, it's important to kind of stay healthy from your own perspective, but also from kind of a business continuity perspective. So you're entitled to one annual health assessment per year, and there's no limit to what this can cover. So obviously you can actually spend as much as you want, but I look at it more as insurance. So it's how much do you need to spend to make sure you're comfortable, you're getting a checkup each year to make sure that you're kind of fit and well, and if you're not, you can take corrective action on it. The seventh area you might want to look at is relevant life assurance policies. Okay, and the reason why I say that it's relevant is that means it's actually left to trust. So whilst the company will pay for it, it'll get a deduction for corporation tax. There's no BIK on you. And then the point that it's left in trust means it's beneficial again from an inheritance tax purposes. So it's a great way of diverting profits into a more favourable inheritance process. Why is it important for property investors? Typically, we've got a lot of debt or significant debt. When we pass away, I think it's important we don't leave everything in a mess. So I think it's important that you have appropriate life assurance set up that can either clear all of your debts or a significant chunk of your debt to make life simple for the people that have to pick it up after you. The next area, staying on health, you might want to look at is bicycles. If you use a bicycle for at least 50% of the time to get to and back from work, that is fully claimable again, and there's no BIK on it. Another area that you might want to look at is trivial benefits. So trivial benefits are up to a maximum of £50, can be for a treatment at the spa, can be for a meal out. As it says, it's trivial benefits. It's up to £50, and each employee/director is entitled to a maximum of £300 per annum for that. So again, it's relatively small, but you should really be making sure you're utilising all these allowances that are out there. Most of us now have an iPhone. Again, if you use your iPhone mainly for work, it should come off company expenses. Similarly with a laptop. And again, that's on the basis that these items are used mainly for work, so make sure that they're purchased through the correct bank account, and you can reference them accordingly. So the next areas I want to talk about really is interest, typically on money that you're going to put into the company. So when we start a company business, you've got to go out and buy flats or apartments. Typically, you'll need deposit funds. So typically, the director will lend that money to the company really as seed capital. And there's an allowance called a personal savings allowance, which enables us to receive up to £1,000 tax-free per annum if we're lower rate taxpayers, or up to £500 if we're higher rate taxpayers. So if your company's due you money in terms of a positive director's loans, typically from deposit funds or any other startup costs you've put in, you want to be making sure you maximise that benefit, because again, you'll get it paid income tax free, but also you'll save because it'll be an expense to the company, so there'll be a corporation tax saving for you on that. The other thing to be aware of is the director's loans in general. So again, if you've put £50,000 into the company, you'd be much better drawing that 50,000 back out that the company's due you, rather than having to pay yourself, for example, either dividends or salaries where you're going to have extra tax hits on that. There's also now a director's loan ISA, which I also use, which is also a way of really supercharging some of the interest you can charge on your funds that you've put into the company. So that can be a really tax effective way, again, saving on income tax and the corporation tax. The flip side, if you've kind of extracted all your money, you can actually borrow up to, I think it's £10,000 any employee or director can receive on an annual basis as a tax-free loan, as in there's no charge on it. Again, that obviously has to be paid back to the company, but property investors getting a £10,000 tax-free loan can be a significant benefit. Some of the other areas that you may want to look at is that it's quite common to invest and educate yourself, whether that's in formal university courses, whether it's in formal training. Again, if that's related to the work that you're doing, that can be fully offsettable against company expenses. The final area is there's a small allowance for a home office allowance. Typically, most people obviously work in the office, but also do some work at home. And that allowance then currently stands at £208 per annum. So it makes sense to claim that as an expense from your company as well. Okay, so what does this actually mean in practice in terms of pounds, shilling, and pence? Let's just run through each of these areas and say if you were to maximise them in 2021, what could it mean for you? Well, you could pull yourself a salary of 8,628. You could receive dividends of 2,000. You could get your company to make a £40,000 contribution to your pension scheme. You could get a Tesla Model 3 that I think starts at about 40,000. Your annual health checkup, roughly £400. A company bicycle, let's go for the same, about £400. Reward yourself in 6 lots of small trivial benefits, totaling £300. Put relevant life assurance in place. Again, can vary hugely. Typically, I pay about 3,000 in premiums per annum for that. Getting yourself a new iPhone and a laptop for the company, about 2,600. Maximising your personal savings allowance, 1,000. If you were going to go on an education training program, let's say 5,000. And the use of your home office allowance, that's £208. If you actually total all of those individually, that's £103,536 from pre-tax profits, with the exception of the 2,000 dividends that's paid post-tax. So that's a really significant amount. Remember, if you're working in the business with your partner or with another family member, you could be doubling that amount. So it's actually over 200,000 that you can really manage through the business with very minimal impact on tax saving for you, with the benefit with some of these actually being better for you in terms of long-term for inheritance tax planning purposes. So a couple of main points to that. Some of those costs are one-off, so obviously you're not going to buy a new Tesla every year, but also some of those costs are annual, so you can maximise the £40,000 into your pension on an annual basis. Secondly, though, you need to be careful that the tail isn't wagging the dog. You've got to make sure that the company's in good order, the company's making profits, so that it can actually invest and maximise a number of these areas. Thirdly, I would say that a lot of the time as property investors, it's quite easy to go out and buy a new house and to add to the portfolio, whereas sometimes you can actually get better returns by making sure that you're maximising the money that you're currently earning by looking at exercises like this. And then finally, please remember, this isn't meant to be tax advice to anyone. It was just an exercise I was going through to make sure I can manage my tax effectively as possible for 2021, and I was pleasantly surprised by the amount of strategies that I currently use, and also some other ones that I don't use, and also some mistakes that I've made. So, for example, I've been paying my life assurance in my own name rather than the company name. So maybe use this as a checklist for yourself to make sure that it's all going through the company. Are you maximising each of these? Maybe the company can't afford a Tesla, can't afford to pay 40,000 each year into the pension, but maybe make a start with 1,000, 2,000, and build that up over time. And as I say, finally, make sure you get a good accountant, and really accountant who understands property, so they can help you with the stuff like your relevant life insurance, things like your director's loan, that they've really got that specialism in it. Okay, happy investing. If you've got any comments, please leave below. Thank you.